Chapter 4, Insulate Your Income. As you approach retirement and during retirement, you need a plan to protect your money with different investments and instruments than you might have had while you were working and saving. You need to protect your nest egg from unforeseeable personal events or life changes like accidents and injuries, such as a long-term recovery from an accident, a fall resulting in a broken hip, an auto accident or being hit by a car in a crosswalk, suffering broken bones, crushed ribs, and a major concussion. While accidents are impossible to predict, another kind of personal issue is also hard to predict. A chronic, long-term health issue requiring expensive care over many months or years. Major chronic disease include cardiopulmonary, heart or lung disease, diabetes, Alzheimer's, cognitive disorders, Parkinson's, cancer. Perhaps a spouse cannot care for you, so you pay for a personal support worker to come into your home or go into a long-term care facility. At age 55, with a retirement goal of 60, you don't have time to rebuild the cash amounts you took out for a disability costing you money. If you have a gambling or other addiction that eats up your savings, beware. Your retirement funds are at risk. I had a client who did not know about her spouse's gambling habit until her home had no electricity. He wasn't paying the bills, but using the money to bet. If you can't say no to your kids, stop. Stop your habit to help them out by paying for their smartphone bills every month and an up-to-the-minute new phone, or funding their auto insurance or paying off credit cards or personal debts. I had a client who wanted to help his 2 kids pay back college debts and also buy each one of them a new car as a graduation gift. Stop. Let them adult themselves into solvency. Your financial comfort and retirement will thank you. How to insulate your income. Having a good disability and critical illness insurance policy is essential for getting the best care, but also for protecting your nest egg from large out-of-pocket medical expenses. You need to review your life insurance coverage and long-term care policies. Are your policies and beneficiaries up to date? Real people. Life insurance solutions at any age. When one spouse dies, the survivor is left with 50% of the pre-death income. You might get a 60% survivor's pension, but that still might not be enough to live a comfortable retirement or provide all your needs before retirement for that matter. A solution is life insurance. Lucille is a spouse who stays at home with 4 children under the age of 7. Steve, her husband, works a good paying job. Each one needed more substantial life insurance of the appropriate type. Steve did not understand why Lucille would need just as much life insurance coverage as he did. After all, he was the earner and he needed his policy to cover the earnings that would be lost for the household. Why did Lucille need just as much insurance? I explained that if Lucille were to pass away, Steve would not be quitting his job to take care of the 4 children. He agreed. I pointed out that he would need to hire a regular child care provider, perhaps someone to transport his children to and from school, morning and afternoon, do their family grocery shopping, take the kids to doctor's appointments, and sit with the older children after school to supervise their homework while waiting for Steve to get home from work. Did he think his current income could pay what might be a full-time salary for people to provide these services in case of Lucille's death? That woke him up. As long as you have dependent children, you need to have life insurance in the right amounts. An employer may offer some life insurance. You may have to subscribe to more. You should reevaluate your coverage every 2 years or so. Talk to me as I am life insurance licensed. Long-term care, or LTC, is also insurance. In Canada, there are only 2 carriers. This type of insurance is the last going by the wayside because of the amount of claims, so the cost of the coverage keeps increasing. It can protect your family's retirement assets if you can qualify, and one of the limited products suits your needs. Save as much money as possible. Some employers offer short and long-term disability to cover 2/3 of your income in income protection coverage. Real people. Beneficiary review. I had a couple, Jeff and Jen, who had been married for 7 years. He still had his sister as a beneficiary on his policies. He had simply forgotten about these policies. I find most people have, on average, about 5 financial accounts they need to check in on anytime there are life changes. Make it a habit to check on those accounts and policies annually, and you won't miss any life changes. Work life insurance policies, personally owned life insurance policies, TFSA, RRSP, and work registered accounts are the typical beneficiary accounts to look up and keep up to date.